Well, it looks like AMC is off to a good start for the first day of trading of 2022. This is pretty exciting, and it's looking like we're seeing a secular rotation into small and mid-cap stocks like I've been calling out for a couple of weeks now. So we're going to go over everything you need to know: AMC, the technical breakout, the Ortex data, the max pain, and the Stocko tracker data to get a feel of what is going on and what this breakout situation may potentially look like for AMC. But more importantly, did Aron just hint at a dividend? That's what we're going to talk about as well here in this video. So let's dive straight into it. Hit the like button for me. Consider subscribing to the channel if you guys want access to all of my trades. That's linked down below in the pinned comment, and some links for free stocks in the description of this video as well. So diving right into it, guys, we're seeing about 50 to 100,000 per 1 minute candle. So this is definitely a good sign, and a good sign overall that we are seeing bullish volume the first day of 2022. There is hedge funds and institutional investors that are buying AMC stock today. We're only about 1 hour into trading, and we have 8.1 million shares that have traded hands. Not a huge amount, but definitely a decent amount of volume so far for the first hour. Now, if you're looking at the MACD, that's still obviously very bullish, but what's more important is breaking out past the 20-day simple moving average and these Bollinger Bands. We've been getting more compressed, and these are 2 standard deviations away from the share price. So you've not really seen a big move, and that's what these thinner Bollinger Bands are telling you. You always go from thin Bollinger Bands to widened Bollinger Bands, signifying we could potentially see a big move coming here shortly. But what I'm really watching for is that break above, obviously, the 20-day simple moving average, which is upon us right about now, very close to breaking out above that. But ultimately, once we move above the 200-day moving average at about $33.08 per share, then we will see that break back to the mid-40s, possibly even the $50 range. Benzinga has called out a 50% upside for AMC due to the technical breakout that we are seeing. That would push us to about $47 per share. And if we go to those prices, you're going to see all of these shorts that took on short positions end of November, mid-November, are going to be taking losses, and shorts overall will be taking losses again. And like this guy says, sayonara, motherfucker, to the hedge funds, and we could be in for massive gains yet again and see the next leg up of the MOAS. This is going to be stages, guys. We're not going to go from $20 to $10,000 overnight. Trust me, you will have plenty of time to get to your price target, and we're going to see stages. I do think that next leg up, or that next stage, whatever word you want to use for it, will come in January or in February due to the technical breakout that we are going to see and the strong fundamental year that AMC is about to have. If we take a look at Aron's Twitter, did he just glimpse or try to give us a glimpse into a potential dividend this upcoming year? He said 2 hours ago, my New Year's resolution for AMC in 2020 and early 2021, AMC took on debt at high interest rates to survive. If we can in 2022, I'd like to refinance some of our debt to reduce our interest expense, push out some debt maturities by several years, and loosen covenants. Now, I cannot find anything in a specific covenant that says they cannot issue a dividend. Obviously, until they are profitable, they could not, which they're going to be profitable this year, but there may be some covenant in there that's like a gray line, like you're profitable, but you're not supposed to be giving back money, essentially dividends to shareholders. I think it makes sense for them to actually loosen on the covenants for everybody involved. A dividend expose the shorts, and if shorts are short on their stock once a dividend comes out, the short sellers actually have to pay that dividend. So I think it makes a lot of sense for everybody involved to loosen on some of these covenants. And I think it's only logical to assume he'd try to be loosening the covenants to issue some kind of special dividend or something. You could also probably make the case for them to be able to invest more money into different avenues, but I don't think that makes more sense than possibly a special dividend, since the last time they were profitable in 2018, AMC issued a $1.55 special dividend to all shareholders, and they only made $110 million net profit. AMC is going to make a whole hell of a lot more than that, in my personal opinion, even in 2022. Now, the next tweet. With an improving financial position, one of our 2022 goals is to strengthen our balance sheet. There is no guarantee of success, but we will try very hard to get this done. We are always thinking of creative ways to make AMC's future more secure. And that is nice, right? But their balance sheet is actually rock solid right now, in my personal opinion, compared to where they have been at. Obviously, the biggest thing is going to be their debt, but they have substantially more cash now than they had throughout basically all history, right? They only used to sit at about $300 million of cash. Now they're at $1.6 billion. They're a much more lean business today than they were before, but that debt is obviously sitting at about $5 billion. So that's really the key. If they could pay down some of that debt, even half of that debt here in the next year or two, which I don't think it's going to take that long for the MOAS, but that would still just make it that much better and free up more opportunities for AMC in general. Now, there is a lot of other things I want to get into as far as technicals are concerned, but that's not going to be in this video. That's going to be on the end of the day video at about 4 p.m. Eastern Standard Time, just because I don't want to make this video 20 minutes long, but definitely be looking for that video. It's going to get very exciting. Let's move on to the Ortex data, Stock Tracker data, as well as the max pain. So we're looking at 17.07% short interest. Is this the real short interest? No. This is your bear case, your worst case scenario for the short interest. The short interest is really including all the swaps the hedge funds are using to hide their short interest, as well as hiding it on the option chain. Short interest is really in between 40 and 80%. 40% my worst case scenario, 80% on the higher range, certainly could even be higher than that. Who am I to say? But I do know it's a lot higher than 17%. Now, the share utilization is 76.49%, days to cover at 2.33 days to cover. This has stayed pretty flat, has went up a little bit over the past day or so, but for the most part, staying pretty flat. We're still at extremely elevated levels, and shorts do not want to cover on their short positions. This is literally a ticking time bomb. Just wait until you see the full rotation into these mid caps and small cap stocks. This is only the first day of 2022. That rotation is still coming in full effect. Probably a week or so away by the end of the month and into February for certainty. Now, the Stock Tracker data. We're looking at about 94,000 calls that are out of the money expiring this Friday, and about 5,600 that are in the money expiring by this Friday. 13,700 on the put side that are in the money. 78,751 puts that are out of the money. So not too much activity overall, but certainly if we do start to see AMC break out past, say, $30, $35 per share, it can help the cause here. It will be buying power. Buying power is buying power, but I wouldn't hold my hat on a gamma squeeze or anything like that. And the week after that, the week that I do have my one call on, January 14th, even less activity. About 2,000 calls that are in the money, about 27, almost 28,000 that are out of the money. On the put side, even less. 3,000 that are in the money, 8,300 puts that are out of the money. But for that January 21st expiration date, it's going to be very key to pay attention to this, because we are seeing a lot more options actually being purchased on this expiration as well. We're almost at 500,000 options that are out of the money, and 110, almost 111,000 calls that are in the money. That's 11 million shares that already will have to be hedged for by this expiration date. But that's a potential almost 49 million shares that will have to be bought on the out of the money call side. If AMC does start to make big moves, even a fraction of that going into the money is going to be quite substantial. On the put side, it is substantially less total option activity, about 63,000 call or puts that are in the money, 312,000 puts that are out of the money. So keep that in mind. A lot more bullish activity for this expiration date than bearish activity. Now let's briefly pull up the max pain and then we will wrap up this video. So the max pain for this Friday is $29 per share. Take it with a grain of salt. I sure hope we're above $29 per share, but it'll still be a move to the upside comparatively to where we are at right now at about $27.69 per share. So it would be a win overall, but I'm definitely looking for a little bit bigger of a win towards the end of the week. So that is basically going to conclude this video. Volume as of right now is 10.7 million shares. So not terribly low, not terribly high at the same time. After all, you don't really want to see high volume when not too much is actually going on. You want to see higher volume start to pick up, but go to 50, 60, 70, 80 million shares that trade hands every day, but the price is moving up, say 5% on all of those days. That's where you really set up for a large short squeeze kind of situation, because you'll always see a short squeeze when low volume heads to high volume. But our high volume levels, or ranges I should say, in between 2 and 400 million shares. So if you can see the price of the stock move up substantially on, say, 100 million shares that trade hands every day, once you do start to see hundreds of millions of shares that trade hands every day, that's where you can see a possible 40 or 50% jump to the upside on any given day. So that is going to do this video. We are up 2% at the time of this recording. Looking really good for 2022, baby. Let's get it. We're in there like swimwear. That's going to be all. Love and appreciate you guys. Thank you for watching. I will see you in the next one.